Okay, I think it's a good time to start. We'll just allow others will join us in the course of the conversation. Good afternoon, everyone. Welcome to the 14th edition of our webinar series, themed Year 2020 Business Review, brought to you proudly by DCSL Corporate Services Limited. Last year and early this year, 2020 was forecasted to be a promising year. However, it has turned out to be a tough year characterized by the COVID-19 virus pandemic, the lockdown, collapse of global oil prices, the turmoil over the US elections, unemployment, and various other issues that we experienced in the course of the year. The aim of the webinar today is to conduct a review or have a chat with Dr. Adedipe to discuss business economy in 2020. We'll be having Ms. Chinwe Egwin moderate the session as well. Before I hand over proceedings to our moderator to begin the session, my name is Nike Taiwo. We also intend for the webinar to be very interactive. We therefore urge participants to leave comments, contributions, and questions using on the platform using the various icons on your screen. I would like to quickly introduce us to DCSL and some of our services before I hand over proceedings to Ms. Egwin. Some of our corporate services, some of our services include governance services, board evaluation, codification of charters and policies, trainings for senior management and directors, facilitation of retreats and strategy session, director induction, business advisory and regulatory compliance, company secretarial support, executive talent recruitment and director selection, surveys and research. Like I said earlier, our moderator will be moderating the session today. We have Ms. Chinwe Egwin, who will be having a chat with Dr. Biodun Adedipe. Please do follow us on all our various social media platforms. We are on Instagram as DCSL Nigeria, on Facebook as DCSL Nigeria. Also, please note that the webinar will be live already on YouTube. You can please share details with colleagues and friends to join us if they were unable to register for the event. I'll just quickly introduce Ms. Chinwe and then hand over proceedings to her. Her profile is currently on our screen. Ms. Chinwe Egwin is an economist that has over 500 published economic notes primarily geared towards macroeconomics, which cover fiscal profiles, monetary policies, foreign exchange dynamics, interest rate movements, trade, GDP growth trends, reserves management, inflation, and sectorial trends, among others. Chinwe authored a book titled Understanding Economic Jargon. The book uses a simple approach to break down how economic indicators and the investment climate react to economic shocks and upswings. It has garnered interest from global and national leaders and has ranked as a bestseller on Amazon. Chinwe is an advocate for women empowerment and a firm believer of equipping disadvantaged women with tools to enable them to thrive. This evening, like I said, Chinwe will be moderating and having a chat with Dr. Abiodun Adedipe. I'll just quickly introduce Dr. Adedipe as well. Dr. Adedipe is the founder and chief consultant of B. Adedipe Associates Limited, which is known popularly as BAA Consults. With over 4 decades of postgraduate work and professional experience that cuts across university teaching, investment banking, project finance, management and financial consulting, as well as leadership in business and non-for-profit organizations, Dr. Adedipe has had an illustrious career that has taken him through the University of Lagos Enterprise Consulting Group, the World Bank, International Merchant Bank PLC, and Foresee Monument Bank PLC. He has served in various capacities in government, including member of the Presidential Committee of Experts on the Redomination of Naira, member of the Federal Government Committee of Experts of Expenditure Review, and senior special assistant to the President in the Office of the Chief Economic Advisor. Thank you, um, Dr. Adedipe and Ms. Egwin for joining us today. I'll now hand over proceedings to Ms. Egwin to begin the session. Thank you very much.
Thank you so much, Nika. Thank you for that introduction. Good afternoon, Dr. Adedipe. I'm so excited to be having this fireside chat with you today. I think we should just dive straight into it. So, what I would like you to start with is giving us a brief overview of Nigeria in focus.
All right, thank you so very much, Chinwe. And let me also acknowledge DCSL for having me here as a guest to look at our business environment, in particular, give some attention to the dynamics of our economy. Now, as a kind of overview, like Nika said earlier while introducing this fireside chat, 2020 started as a year with a lot of promises. In fact, a lot of the conversations that we had at the beginning of the year went beyond 2020. We're envisioning what the new decade will look like. In fact, there were many conversations about, the economies, that's plural now, of the new decade. And so everybody was kind of excited. And well, we are seeing a new chapter, and then probably things will work better, economies will move faster, grow more robust and inclusive. And so therefore, things are going to get a lot better. So that was how we started the year. Then toward the end of the first quarter, it became clear that what we expected to happen was unlikely to be so, because by the end of the first quarter, the health crisis that started in China December 2019 had become a pandemic. That was a global health crisis. But then there was something we saw bringing this home and sensitizing business owners and managers to that. And of course, governments too. Now, what we said was that, yes, there was a health crisis on the one hand, which if it was not properly addressed, it would transmute into an economic crisis. And if the world leaders and business leaders don't respond appropriately to the economic crisis, imagine from that, then we tip into humanitarian crisis. And if that is not also properly handled, it will become a security crisis, which means full-blown, we might see ourselves in 2020 dealing with 4 crises at the same time: health, economic, humanitarian, security. So of course, now we're almost at the end of the year. It is very clear in terms of what has happened. The noise last year, 2019, was mostly about the, China-US trade war, the implications of that on the global space and all of this. But that has become just a small footnote, so to say, this year in the light of COVID-19. Everybody impacted, from governments, to businesses, to families, households, and of course, individuals. So it's a year bringing new challenge to us in terms of economic activities and how to respond to the various challenges we are facing. So let me put it there so that as we begin to take on specific issues, we can now elaborate.
Okay. So I'd like to know your view on the outlook of specific economic indicators, right? Like a robust, extensive view on. Let's start with the gross domestic product, GDP growth. I'd like to know your view on that, and then maybe move on to oil price.
Okay. Now let me start with the GDP, as you rightly said. Now there have been various projections and outlooks, revisions in the course of the year, and I recollect vividly that sometime in May this year, when we did a review of the Nigerian economy and where we're likely to go, we came up with a projection that was very scary. In fact, even for me as a person, I was not that confident to say it. I was against alternative view on that occasion, and I mentioned what we saw then would likely happen if our government did not respond well. And of course, we saw that also happening in a couple of countries around the world. At that time, convention was that the US economy largest in the world, by the way, was likely to shrink by about 20%. So all these conversations were going on, but the direction was that, look, every government around the world should introduce fiscal stimulus that will prevent a sinking of the economy to such scary levels. So we made it very clear that, look, in terms of fiscal stimulus that will sustain this economy, we should now benchmark that against our GDP. All right. Now we got to June. The IMF issued its outlook in June. They came back later in October and revised that. And of course, we also were looking at that and revising our own expectation as well. So, but if we look at 4 dimensions to that, the first is, what does IMF expect of Nigeria's GDP in 2021? Okay, they expect the GDP to shrink by about 4.3% this year. But 2021, they expect the Nigeria GDP to grow by 2.6%. Then the World Bank is looking at that in the neighborhood of about 2.7% thereabout. Now, the National Bureau of Statistics, going by what they put out in the MTEF, expect the Nigerian economy to grow by 3% in 2021. Now, in BA Consol, we expect a growth rate that could be anything between 2.7 and 2.8%. But one interesting thing I want to point out to the audience here is this. If you look at all of those projections, the list of them is that of IMF at 2.6%. So, but there's also an interesting dimension to it. Now, in the last 7 years, our economy has been growing slower than the rate of growth of our population. So now, based on the latest data on our population and the growth rate from the United Nations, we have a 2.58% annual growth rate of our population, which means every of these projections of the growth of our GDP for 2021 will be higher than the rate of growth of our population. So that is a pointer to something positive that should make everyone look forward to it, that yes, most likely 2021, we see GDP grow at a rate faster than the rate of growth of our population. So that is to be expected. But what does that also mean for business people? And I always encourage business people to do this benchmarking. And the way it goes is this very simple logic. If you operate within the Nigerian economy and that economy is growing by a certain rate, your own business should not grow less than that rate. Otherwise, somebody is growing within that system at your expense. So in which case, if I want to ensure that my own business doesn't lose out to a company that is not even directly competing with my own, then I should aim to grow my business at a rate faster than 3.0% in 2021. That is about GDP. Now, coming to the issue of the, where there are quite a number of them that we can look at here, that's macroeconomic indices. If we talk, for example, about oil price, okay, as at this afternoon, let me say just about 30 minutes ago, because we monitor what is happening within that space on an hourly basis. But when I checked it just before I joined this platform, I saw that there are projections, various expectations by several investment banks around the world, then Trafigura and several other people that play within that space. There is an expectation that the benchmark Brent will likely have its price rise up to $58 per barrel. For some other investment bankers, they project $55.88 per barrel. All right. Now, if you look also at Nigeria's Bonny Light, you'll find something interesting there. Bonny Light actually, at certain times of the year, prices higher than the Brent. And so what I did was to check at least about 45 minutes ago. Nigeria's Bonny Light was going for $48.68 per barrel. That's within the last 1 hour, $48.68 per barrel. So now, the usual pattern with oil prices during winter is just coming on now. Usually the demand for crude oil and of course the derivatives, which are the refined products, also goes up. So but what's the expectation next year? Yes, with the COVID-19 vaccines that are expected to begin to be distributed, there's an expectation that by the time we get to second quarter of next year, the global economy will begin to pick up very strongly. So if it begins to pick up, then there will be a demand for hydrocarbons. It is that demand against supply of faith that we have suffered this year that will drive the expectation of higher price of crude oil in 2021. So that is the current sentiment as far as oil prices are concerned for 2021. So if it goes up there, it means it will be good news for Nigeria from that perspective. But not so good if you talk about the regulation of the oil sector anyway, because on the other hand, regulated, downstream sector means the price of refined products will also go up commensurately. So now, that's on oil price. But we can go on and now take it to exchange rate, the external reserves, and the rest of them. But what I always encourage people to do when it comes to the exchange value of the Naira, yes, we won't go the way that professional economists and bankers do that right now, because there are many factors they look at that define changes in the exchange value of a currency. But the simple way for the business person is to look at the OTC futures market and ask, what are the rates there on a monthly basis projected for the next 60 months? So what I also did before we began this conversation was to go on the website of FMDQ, all right, and check the OTC rates for OTC futures between now and year 2025. So if, for example, I'm negotiating a deal that will be concluded, let's say December 2021, then I can easily pick up the rate indicated for December 2021 from that platform at 431 Naira 8 kobo to $1, and now use that to do my projections. So if, for example, I have obligations that will mature, let's say in 3 years' time, for example, we say 2023. So what does it say on that platform? It says the expectation of the Naira exchange value is 510 Naira 46 kobo to the $. That is December 2023. So in which case, if I have a picture of how the exchange value of Naira will go, then I can plan in terms of scheduling my businesses and planning my obligations in terms of when they mature and the Naira implication of that in extinguishing those obligations. Now, for external reserves, one thing that I see as a major challenge to us in Nigeria is that in the last 7 years, our imports have been growing in value. The latest available external trade data, foreign trade data for June 2020 shows a figure of 1.374 trillion Naira as our import per month, okay? If you convert that to dollars, that is about $3.81 billion monthly in terms of imports. Now, if you set that against our current external reserves, that will give you something like 9.2 months, okay, cover. But going by what the central bank governor said last week Friday evening at the annual bankers dinner, he said we have cover of 8 months. So working that back, I then told myself it means that our import bill in Nigeria has grown from where it was as of June this year to early December this year to about $4.43 billion per month. So in which case, the real challenge to us is the fact that we consistently import a lot more than we're exporting. Now, when you check the terms of trade, Nigeria is just fairly okay in terms of trade, because our terms of trade is slightly a little above 100. And that means the price index of our exports is just slightly higher than the price index for our imports, which means in terms of value. So what that translates into, in any case, is that it tells us, looking at that data, that trading with Asia is in fact where we get the best in terms of trade, and that trading with Africa at less than 100 means that what we trade with African countries in terms of the interplay of import and export prices, it puts Nigeria at a disadvantage. So where do all of this play together? It means if our imports keeps growing, then the accretion to reserves that ordinarily will come from the oil sector that we depend upon to the tune of about 87% for our foreign earnings, we may likely see reserves actually shrinking rather than growing. So for me, therefore, in terms of projection of external reserves for 2021, I don't expect it to go anywhere above $40 billion in 2021. And of course, that brings us to the issue of interest rates. Now we run in an environment where, and I've said this repeatedly each time we discuss interest rates and how it is managed, that our economy does not respond to movement in interest rates, because ordinarily, assuming every other thing is equal, we say that if interest rates go up, credit should become more expensive, and so people should borrow less. And when interest rate drops, it means there's an incentive to borrow more because it is cheaper to borrow. But you find that it doesn't play out so in our environment. Even the policy role of MPR as a signal rate doesn't play out well within our system. So when central bank moves up the MPR or moves it down, ordinarily it is supposed to be a signal rate to the financial institutions to also adjust their own rates accordingly. But hardly does that happen in Nigeria. In fact, Nigeria is an example of what we say in economic theory, that interest rates are sticky downwards, which means drop MPR, you find that most of the time in Nigeria, interest rates in the money market doesn't come down by the same, margin. So in which case, you find then that what comes to bring effectiveness in monetary policy in Nigeria is more in direction of quantitative easing and intervention, which is what Central Bank of Nigeria has been doing mostly in the last 4 years in between the two recessions we have experienced. So what then does that mean to me? And the way I look at it is this. Let's assume I'm a member of the Monetary Policy Committee of the Central Bank of Nigeria. How will I vote in terms of moving the reserve requirements either upwards or downwards? And I tell myself that if we are going to have growth in 2021 as projected by different stakeholders of the Nigerian economy, it means then that it is inevitable that the rate of inflation will go up in 2021. So if growth is what we are desperate for, then inflation is something we have to live with within that period. But unfortunately, the major element in the inflation rate for Nigeria today is food inflation. In which case, if we have any chance of taming inflation in 2021, it has to be what we do in the agricultural sector, especially what we consume. But if we still import anything, and of course, a lot of that is still about food items, then we will likely see ourselves seeing the price of the inflation, food inflation, still going up. And why? Because your currency remains weak, and in fact weakens further because of what I call speculative pressures, then you cannot escape those imported food items becoming more expensive, not because of the price at the country of origin, but because of the exchange value of our currency. So that is what I see with respect to all these major macroeconomic indices in 2021.
Okay, thank you so much, Dr. Adedipe. Can you hear me?
Yes, clearly.
My internet is behaving a bit funny. But I want to ask, you spoke about GDP growth and you gave a healthy projection for growth. What exactly are the key drivers? That's my first question. And then, there's talk around a second wave of this pandemic hitting.
Yes.
I understand that Nigeria is a bit insulated when it comes to how we are aligned with the global village. But that second wave could also affect the oil demand. And of course, you know that we are highly dependent on oil. So once there's an oil, everything kind of crashes down for us here in Nigeria. So I think my first question is, what are the key drivers for this healthy growth you're seeing next year? And then I'd like to get your views around this talk around a second wave and how it could actually affect the oil price or the oil price in general.
All right, thank you very much. Now, in terms of the projections for growth, what most of the, let me say, the analysts projecting reasonable growth for the economy next year. And that's, as I said, making reference to IMF, the World Bank, of course, National Bureau of Statistics, ourselves, and various other, stakeholders. The basis reason starts first and foremost from the structure of our economy. Now, that structure makes it very clear that agric is dominant. In fact, it became more dominant if you look at where agric was June this year and now September 2020. Now, the GDP contribution to GDP, September this year, had agric at 30.4% of contribution to GDP. So that sector is growing, and it, interestingly, also attracting even more investors. And it's based on what we know as facts and figures that are available. So on the one hand, now there's also ICT, and there's an interesting thing about ICT in Nigeria. ICT in the last 5 to 6 years had grown to number 3 in terms of ranking contribution to GDP. But what played out June this year was that for the first time in the history of our economy, the ICT sector overtook trade in terms of contribution to GDP. At the time, agri did about 21%, ICT did about 17%. And so what we're also expecting is that some momentum for growth will also come from the ICT sector. Now, trade is also expected to pick up. And the reason is very simple, and that links up to the second question you asked. Second wave of COVID-19, but there's a pattern that has also evolved with respect to COVID-19's impact on economies. And this came from an observation of what happened in China, in US, in Europe, in East Asia, and in Australia. Now, what has happened is that when economies, or let me say government, respond to COVID-19 by lockdown, usually demand becomes what we might call pent up, so to say. So as soon as you reopen the economy, there is always a very fast rate of growth and pickup, which we have seen evidence of this year in several economies. Let me make reference at this point to Australia, for example. Australia went into recession by the second quarter. But by the third quarter, it came out of it. In fact, if you annualize the rate of growth, I think this one is about Taiwan. The annualized rate of growth came to 117%. So which means the growth in the third quarter, if you now annualize that, you get 117%. It's unprecedented. The same thing for the US economy. The growth rate in the third quarter of this year, if you analyze it, of course, that was what Donald Trump was boasting about. That the US economy grew by a percentage that had never happened in their history anyhow. Of course, you'll be looking at about annualized growth rate of about 30% for the US economy. So most economies, as they reopen, usually they reopen at a very fast speed. So what is actually projected now, and that is what is driving the expectations of the likes of Goldman Sachs and so on and so forth about the price of crude oil in 2021, that as these economies reopen, and mark you, China in any case is doing very well. Purchasing Managers Index in China is steadily above 50, all right? The same thing happened in some countries in Europe, although a few of them dropped a little below 50, meaning manufacturing is contracting again in Europe as they are locking down their economies in response to the second wave of COVID-19. But the expectation is that by the time they tide through the winter and enter autumn, the likelihood is that those economies will reopen and then the demand for hydrocarbons will pick up. And that is where the expectation of higher price of crude oil later in 2021 came from these various stakeholders in the oil sector. So if all of this happen, that means on the one hand, we gain some, let me say, make some recovery in the oil sector. Then on the other hand also, we have a non-oil sector that is growing steadily and expected to grow stronger. Then the other side to it is foreign investment. And that as the global economy begins to find its foot and strengthen, the likelihood is that we may see foreign investors begin to look the way of Nigeria. All of this interplay, which comes on two planks. Production is one, and then the other side is finance that bridges any gap that production is unable to fill in Nigeria. So the interplay of all of this is why we expect the GDP in Nigeria to grow in 2021. And then, of course, the expectation of the world economy, global economy recovering also in 2021 is going to influence the demand for hydrocarbons. So that is the way all of this interplay.
Okay, thank you so much for that. I'm going to ask a follow-up question with regards to your projection on reserves. I don't know if that projection incorporated the likely inflows from multilateral. So of course we already have the $3.4 billion that came in from, I think we're expecting from the World Bank and also the Africa Development Bank. So I just wanted to find your projections incorporated those multilateral loans.
Oh yes, certainly it's incorporated, because if you look at the figures we are talking about, it's not insignificant. All of them put together are probably not more than $5 billion. Well, as I said, there are three things interplay here. In fact, let me say four things. One is what you made reference to now, the inflows from the multilateral, agencies on the one hand. Then the one I mentioned, which is foreign investors, either in the form of FDIs or in terms of portfolio investment. Okay, so that is the second plank to it. The third plank is what we call the accretion to your reserve that comes from the interplay between your imports and your exports. So which made me make reference to the terms of trade earlier on. So if we now, yes, we are still constrained by our allocation of 1.4 million barrels per day by OPEC Plus on the one hand, but the price of Bonny Light, as I said, is getting stronger by the day because it's a premium crude anyway, internationally. So if the price of Bonny Light is in the 50s range, and we have a budget assumption of $40 per barrel, which is what we are still discussing. So if we maintain that, that means we have some window also of accretion to reserve. But the interplay of all of this with imports also growing, as I said earlier on, $3.81 billion per month, and now implied $4.43 billion per month within the space of 6 months. That should be worrisome to anybody looking at those data. So it is the interplay of all of this that made me project that I don't see our external reserves growing above $40 billion in 2021.
Okay, thank you for that. I was just writing as you were talking. Okay. So for the monetary policy rate, I know you touched upon interest rates. I want to get your that we've seen central banks across the globe trimming just to help stimulate economic activity in their respective countries. Now, personally, obviously, with my own economic analysis at FBN Quest, the trimming or the hiking, well, let's say more of the trimming, the penetration into the real economy is very slow when our policy committee decides to trim. So, of course, they've trimmed twice already this year, as they should, which it wasn't a surprise step. But I just want to get your view on that. Like, what's your view on the trimming by a few basis points, which they did a few meetings ago?
Yes, as rightly said, it was expected But that is something that some of us have been canvassing for quite a while. And the logic for us is very simple. If the Nigerian economy desperately needs to grow, then one of the ways to grow it is to play with the interest rate, that is the policy rate. The idea then, as I said before, is that the policy rate signals the direction the central bank wants lending rates to go in the banking system. Now, if we have a unanimous decision that what we want is growth, then they should go that way. But again, there are two things to it. One is the direction of the movement of empire. The other one is the magnitude of change. The one thing we've observed happening all around the world with central banks, as rightly said, is that a good number of them have been trimming rates. But some came to a position where they said that, look, we've seen our economy pick up now after the impact of COVID-19, but we have not yet gotten fully out of the wood. Therefore, we are not going to move rate up. My feeling is that the Central Bank of Nigeria might likely, by the middle of 2021, begin to think that they should move up the MPR. And why will I say that? Because they seem to be more sensitive to the rate of inflation than they are to growth of the economy. So, and if that is the case, we may likely see by half year 2021, the MPC coming back and talking about moving the dial of MPR upwards instead of maintaining it where it is in order to incentivize growth. That is my feeling, my gut feeling. I can't put it to any data that I rely on, but of course, I mean, quite very well, you are a banker, so you understand this. When it comes to interest rate forecast, there are two models. There is the histogram model, and there's the one where we say, look, the gut feeling of someone that we found over time will give you an idea of where it will likely go, and you discover when the time comes that the rate will be at that level. So having developed that over time, then you look at balancing the histogram approach with this gut feeling approach. But in this particular instance, I will say it is my gut feeling that the MPR might likely be moved up by the time we get to mid-2021.
Okay, that's very interesting. That's interesting because yes, when you look at the body language of the committee members, it seems as though they favor a higher policy rate, right? But let's say the past two personal statements that have been released for us to view from the central bank, you'd see that they've also, or some of the members have also recognized structural challenges are a major factor for our inflation issues. So let's see what happens next year if they would still have that mindset when since they now recognize that structural issues are, of course, they are a big challenge with inflation, especially food inflation rates that you mentioned earlier. To discuss a little more around the exchange rate effects.
Okay.
It's a favorite topic for so many people, as it should be business owners. You know, we're heavy on imports, so I understand the exchange rate is such a big topic for a lot of people. You know, in the parallel market, we've seen it hit as high as 500 in these times, in this COVID. And we've seen the shifts that were made, you know, from the CBN. We saw the shifts that were made, the window, the NAFEX window. We saw all of that happen. I want to get your view because most of my phone calls, when people are calling to say, Chinwe, understand, FX is always top. So I'd like to get your view around the exchange rate.
All right. Now, let me put it this way. I will first of all look back in terms of history. You know, sometime, I think this was in 2002, November, the Central Bank of Nigeria had what they called the Monetary Policy Conference. They invited someone from IMF who 2 weeks to the conference, told them that he had an urgent official assignment that came up suddenly, and so he won't be able to attend. And the CBN Committee of Governors settled on me to come address that issue. And it's similar to what we are discussing today. So the question they put to me then was that we have three macroeconomic prices we are dealing with: exchange rate, inflation rate, and interest rate. Which one should be the primary focus and attention of the central bank as the monetary authority? And I remember, just like you said now, I told them that, in fact, the way I started was in a very interesting way. And I put it as a question to the then CBN governor, that is Baba Chief Joseph Sanusi. I put it to him then that, sir, if this economy works well, President Obasanjo will take the credit. But if the economy doesn't work well, you, as the sitting central bank governor, you will take the blame. So I then asked him, do you agree with me, sir? And he said, yes, I agree. I said, okay, fine. So let me now make my presentation. And I made it very clear that there is something about the perception of the typical Nigerian that he or she measures everything by the exchange value of the naira. So in which case, in pricing their commodities, in making economic decisions, they always look at that window. What does the exchange value of the naira say? And so you find, for example, the woman roasting plantain by the roadside. You get to her and she says, your roasted plantain, why have you increased the price? The next thing the woman will tell you is that dollar don't cost. Then you wonder, do you import the plantain that you roast? Or how come dollar is featuring in your pricing template? And that woman will now teach you basic economics, which explains why this is happening to us. Okay? She tells you that, yes, the money I use to buy things to take care of my family, I make from selling roasted plantain. But a lot of what we buy in my family are imported. And each time we go out to buy, they tell us dollar don't cost. So if I want to survive with my family and still remain in this business, that is, ensure my capital is not eroded, then I must also reprice so that I can generate sufficient revenue to still maintain my capital and have some surplus that can take care of my family's needs. Okay? So the mindset, therefore, of the regular Nigerian is that I am losing something if Naira loses in terms of exchange value, and I'm gaining something if Naira also, gains in value. So almost everybody thinks in that perspective. But there's something I want to bring on here, and that's the fact that we have an economy where there's a mindset about rent seeking. So most of those that complain, and I've seen this play out between Nigerian business people and foreign business people that come here to do business or make inquiries. When Nigerian business people make their plans, they always look at, we will always have an opportunity to access FX from the official window. So what we hear most of them say today is to complain that they cannot access FX from the central bank. But when you deal with foreign business people, and I've been involved in so many negotiating deals that run in hundreds of millions of US dollars, even some in billions, okay? Every single one of those foreigners, when they invest here, they always talk about the exchange value of the Naira by the roadside. So they've already factored it into their projections. When they decide to come here, therefore, you never hear them complain that they cannot get FX from the central bank. So for them, the point is that the most expensive FX is what I plan with. So when most of them complain, therefore, it is because it is ingrained in their mind that the only way to do business is get FX from central bank. But of course, a good number of them also have at their mind the idea that we can find a way of being round tripping or speculating. I've dealt with many manufacturers in Nigeria that all they think about is get official FX, import what we claim to be producing here, and just couple them together. All right? So I've experienced that many, many times. So the real issue here is that many times we complain about the exchange value of the Naira because that is what we think defines our life. And that is why also I have been promoting this particular concept that until the what we call, we experience a paradigm shift where we begin to consume what we produce in Nigeria and also begin to produce what we consume. We may not get anywhere. I mean, in the light of this, I will give a live illustration, okay? Many years back, when Aliko Dangote was going into rice production, all they did simply was look at our population, how it was growing, and now it is migrating from rural to urban areas. And they projected that the consumption of rice would likely increase. Because when people migrate to the urban area, they go for the easiest meal to make. And so rice is very readily easy to make. So consumption of rice, therefore, was increasing as urbanization rate in Nigeria was increasing. Okay? So for them, therefore, it was worthwhile to invest massively in rice. Now, they did the same thing about refined petroleum products. Okay? And that is what we are looking at by June next year, hopefully. The Dangote refinery will start turning out refined products. And by 2022, fully 100% capacity utilization. Now, what does that mean? You import so much in terms of refined products. So the question is, you produce the crude, no beneficiation. Beneficiation means you add value. You don't add any value, you export it. And then you import refined products. So what that simply says is that the value you are adding locally here is so little. So because of our import bills that are growing, we keep creating jobs abroad. And so at times also, I give people the example of South Korea. Many people don't even know this, that South Korea took a replica of our Jakarta. That's what they constructed to enter into iron and steel and move on to automobile. Now, I'm privileged to know that because I was one of the consultants that did an evaluation of the steel subsector in Nigeria way back in 1988. All right? One of the things we found them, that was when we discovered that the Koreans came and took a copy of Ajakuta, and that was what they constructed. But today, we ride Korean automobiles. As we speak today, if we talk about electronics, okay, again, South Korea is a big player there. We talk about the field of semiconductors. Maybe Taiwan is probably the one that is now giving both South Korea and China sleepless nights. And that is talking about the data that came out this week, okay, in that particular sector. So the question for us is that we have not come to a point where we anchor our economy around a particular sector. And what I mean simply is this: the moment you anchor your economy around the sector, it means everything about that sector is what will be the focus of government policies, and that is also what government will incentivize. Many years back, the Ghanaian government put an incentive in ICT and said, listen, if you're a foreigner coming to invest in Ghana, in the ICT sector, your investment must not be less than $20 million. So if you therefore see us as attractive as a market or a place to produce with a view to selling to Nigeria, and I've experienced that many, many times, okay? So if you want to do that, then don't come with less than $20 million to Ghana if you want to invest in ICT. So it then means that if you want to do that, they now offer you a bundle of incentives. So if the incentives are attractive, they're also saying that minimum you bring here is this much. Nigeria has never at any time done anything of that nature. When it comes to the new trade agreement, the Ghanaian government said, look, we'll be signatory to this agreement only on one condition. And that condition is to give Ghana the approval to be the hub of aviation in West Africa. So they put a condition before signing it. Nigeria never put conditions. Just kept putting pressure on our federal government, sign the agreement, sign the agreement. Nigeria will be a loser. Never at any time do we put forward our condition for being party to any international agreement. So all of this interplay, and of course in your tariff structure is also very, very defective. Now, government recently reduced the tariff on vehicles, and they say, well, because of this or that. But in reality, Rwanda has done it. I see that happen in South Africa. Toyota went to South Africa many, many years back on account of the fact that South Africa said, come here, we have the infrastructure, We make the environment conducive, but Nigeria is the market in Africa. The same thing, Daimler-Benz. Anywhere they go to, they know Nigeria is the market. So when Volks went to, I think Volks went to the Ethiopia, there's also Rwanda. Each of them citing their plans there. The target is Nigeria as the market. And so you have signed after, which of course, by tomorrow, it should become effective, 5th of December. So that means then that anything they produce anywhere in Africa can freely come to Nigeria without any strings attached. That's what it means. So in which case, we'll be riding cars manufactured in Rwanda, but the market for those cars are here in Nigeria, but the jobs created in the process are to be created in Rwanda, a country with 12 million people, roughly half of the population of Lagos State. But then here we are, we become their appendage, so to say, in that regard. So this is where the problem is. So there is no alignment between our fiscal policy, our monetary policy, and our commercial policy. So these are the major issues that we are battling with here. So which of course is what the MPC will refer to as structural problems. At times, we economists, we call it rigidities and whatever. All that is big grammar anyway. The bottom line is that we make so much noise about infrastructure. It's a lot more than infrastructure that will bring investors here or make even our own manufacturers to remain here. That's the same problem, ladies and gentlemen, that Taiwan suffered relative to China. The same thing Nigeria suffered with Ghana. Where manufacturers left Nigeria for Ghana. They left Taiwan in droves to China. But, what has happened in response to COVID-19 is that manufacturers are now coming back from China to Taiwan. That is their own nationals. And the fear is that the same way we thought Nigeria's economy has fallen to pieces, so they thought about Taiwan until COVID-19 came this year. So for Taiwan, therefore, as an economy, COVID-19 is a blessing as we speak. So it's about what you want to make out of what you have. And that is my interpretation of all of this. It's a complex thing, but we must be very clear what we want and then define what we require to provide incentive for people that will invest in those areas.
Thank you for that. The way you were talking about the example of steel, I was just shaking my head because it's deeply concerning. That's the same example or the same situation with oil palm and Malaysia. It's really upsetting. I'm hoping that the economic shocks that we've seen over in less than 10 years, I believe, because we had one in 2015, that was oil price decline, entered recession, we were struggling to come out of it, and then hit with this one that was triggered by the COVID-19 pandemic. I just really hope that all of this would stimulate or trigger the authorities to try to do better, because we have what it takes. I just think decision making is the issue and implementation. I'm happy you Africa Continental Free Trade Area. That was actually my final question from my own bank of questions. I still have additional questions for business owners. Yeah, like as you said, it's coming into play very soon. I think I'd like to hear how businesses in Nigeria can position themselves to benefit from it, because what you said is true. Nigeria, of course, is the largest economy by GDP, and a lot of these countries look into Nigeria for their consumer market. There's also an argument, in as much as our population size is so large, purchasing is not as high as what people think it is. But yeah, there's still concerns or fear around dumping from other countries. You said with regards to the example you used of Rwanda. So I really want to know, from your perspective, how do you feel businesses, especially SME owners, how can they position themselves to benefit from this free trade agreement?
Thank you so very much for that, because it's really a major concern. And the way it plays out is this. Now, in my own view, looking especially at dumping as an issue, in international trade, you cannot prove dumping until you have evidence that the government of the country of origin of that product actually provided a support to its manufacturers in such a way that the landing cost or that particular item in your own country is more or less exactly the same as in the country of origin. So, and of course, it's a very difficult thing to get unless you are really, really particular about it and you go about it in a discreet manner as well, because they won't give it to you freely, okay? Which is the essence of the trade war between China and the USA. So if therefore we are unable to prove a case of dumping, that means our SMEs are highly vulnerable to international competition. So, and the way I will put it is this. Now, in the light of COVID-19 and its impact on businesses, what we have advised business to do, since we began to converse around this in April, is there are 3 dimensions to it. The first one is to respond appropriately. The second one, now we say, is to survive. That is to get through to the end of 2020. The third one now is to recover and grow. And of course, I took that from a lot of materials that McKinsey shares with our company. Okay, so what are the elements in terms of survival? Now, I mean, the first thing about survival is to look at where you are now and then ask yourself, what must we do about our business model? Because I've had a conversation around this some time ago where an SME, operator was telling me that, oh, there's no how, nobody can persuade him to reduce his price. And I said, if you can't be persuaded to reduce your price, you are dealing with a situation where a cheaper import, I mean, just imagine the reduction in the duty on imported vehicles, not trucks for mass transportation, but even now ordinary vehicles, cars that people can use in commuting. So now, what will that do to PAN that is being revived as we speak? What will that do to Volkswagen Lagos that is being revived as we speak? That means our government has opened the space for cheaper cars to come into Nigeria and compete with them. So the first thing to do is you look at your cost profile. Many SME operators are not that enthusiastic about looking at their cost and cutting waste. Anytime I talk to them about cost, all they think about is let's sack people. But they forget that it is not about the cost of people that is the issue. There are so many other costs that if you profile them properly, what we call, we call it, there's a technical name we give it in cost management. And that means you look at the most significant in your cost profile and ask yourself, what can we do to reduce this cost? That's where it starts from. We also build in efficiency because there are many slacks in the way people produce things. I handle them in Nigeria here, and I've seen quite a number of them. You need to improve on efficiency. Then also, like one entity that we had a conversation with recently, and I posed a strategic question to them. You own your own building, your own office, all right? So I asked them a question. What exactly do you need? Do you need an office building or an office space? And that triggered some conversation until eventually they came to the point that what we actually need is an office space and not an office building. Now, as we speak, that company is trying to, sell a particular property they have valued at close to 3 billion naira. That they sell that, take a space that is adequate for the staff, and then the difference is something they can now invest in the business. So you generate some liquidity from that. Now, there's also something we mentioned here, and it's important to take note of that. Yes, the Nigerian Stock Exchange did something this year, and that is in November in particular, they migrated 4 SMEs from the alternative securities market, ASEM, to the growth board. Now, migrating them to the growth board means those companies now will be able to raise fresh capital. And of course, that will also improve the liquidity of their shares in terms of trading. Now, but that is not so much as what I took out of it. I now probed that and said, what made those companies qualify to be migrated from ASEM to the growth board? And this is what I want to now recommend to our SMEs. The first is clear vision. you must be very clear about your vision. Then secondly, I found about those companies that they also have good corporate governance in place. I call it, in simple terminology, right behavior. Okay? Right behavior also attracts resources. Then there's what I call the power of execution. If you have a record of always executing your plans, it also attracts resources from various stakeholders. The fourth and final thing I would recommend to them is innovation. And that means you must not only talk about the new normal. In fact, conversion has gone beyond the new normal. What we talk about now is the next normal. What will be the next normal? And that means, for example, that yes, some of your staff probably work remotely. So in the next normal, we'll be looking at people working remotely still and some working in the office. So COVID-19, when it dissipates, will not bring a reversal to the old way of doing things. So it's a next normal. And I was a part of a convention similar to this way back in 2015, where we're projecting what the world of work will look like in 50 years' time to that time. And that was looking at 2065. So what will the world of work look like? Now, we thought that would happen in 2065. But ladies and gentlemen, some of the elements in that conversation, we are seeing them happening right now as a result of the impact of COVID-19. So when you do all of this, it means for every of your staff, you need to redesign their jobs. Redesign them in such a way that everybody's job in your organization must have clearly defined key performance indicators. Once you have KPIs well defined, your staff can work from anywhere. There's a staff of BA Consult, for example, now that has been working from UK since October. All right. So, and we have people like that. We've had people that apply to work in our company from China, from Philippines, from Malaysia, all over the world, from India, all of them, USA. And of course, why would they want to work in BA Consult? What they got about us in the internet space. All right. So the point really is this: if you put emphasis on those four things, you are likely to survive the wave of competition we expect to heighten for Nigerian SMEs in year 2021. And that is a clear vision. Also, you must maintain right behavior, good corporate governance. And then thirdly, you must also make innovations, a daily vocation. We make jest of ourselves in BA Consult. We call ourselves research in motion. That means every day, get new information, bring that to the business. How can we improve the business? Then the fourth one is execution. And you get to execute in the sense that we had a plan to achieve this year, but we have not achieved it. Why? Okay? You want to find out why and also address that. Those four things are critical for SMEs in Nigeria. If we don't want to lose out, as the space is open in Africa for anyone to come, let's say from Europe, set up a factory in an African country in order to compete with what your own company manufactures here in Nigeria. So very important, value to the customer, very critical. You must keep that at the forefront of everything you do, value to customer.
Thank you so much for that. I'm going to add to number 3 and call it 3A, that SMEs should also endeavor to make sure that they're well structured. I think some companies are not properly registered, tax issues. So that's a 3A.
Mm-hmm.
Yeah. Okay.
In fact, let me make a comment on that. Just today, about 30 minutes before this event, one of our big commercial banks, is involved in a transaction that our company is handling, about $100 million coming from China. The EPC has been signed, all right? It involves also a state government. Just before this conversation started, I received a message from those Chinese investors that is there an evidence that that bank has paid taxes? Can you imagine?
Yep.
Just to underscore how important what you just said now is. Mm-hmm. Mm-hmm. And it's a bank that is listed on the stock exchange in Nigeria.
Wow. Wow.
You can imagine. Them asking me, is there evidence that they pay tax?
Wow. It's so important. It's so important. So our time is running out, so I'm just going to switch to some of the questions that were sent to me before we go into participant questions. I won't ask everyone, just pick a few. Yeah, there's one that says, what trends do you foresee will impact corporate strategy in 2021?
Okay. Now, as I said earlier on, now when we began to look at COVID-19 and how companies should respond to that and then prepare themselves for 2021, what we said then was that 2021, from every projection, is promising, but also loaded with challenges. So we said the way to respond, you mentioned one of them, and that talks about the structure. And what we always say there is that every organization that wants to survive strategy-wise in 2021, you must adopt a structure that is market-facing. So that means whichever structure you run with must connect to your market. And then also we said that there are some business processes that you also need to re-engineer. And then in re-engineering, then we also said, if you want to be sharp in terms of strategy in 2021, you must consider what we call end-to-end digitization. And that means how many of your services or products can be originated online, then which of them can be delivered online. Okay, let me give an illustration. There's a Japanese company that relates with our firm, and we are on what you might describe as a retainership with them, okay, on a monthly basis. They pay us for certain services. But all of the things that we do for them is online. Okay, everything is online. No interface directly. In fact, we hardly even have virtual meetings. They just get reports from us on a weekly basis, monthly basis, and then they pay us for the service we are rendering. So that is an example just to illustrate what we mean by end-to-end digitization. But let me now bring something also into the conversation, which I said to most of our business people in 2016, when we experienced that recession of 2016. I said, it's a time you want to explore the possibility of dollarizing a part of your income. That means, what opportunities do you have? Now, I got a message from a lady that produces what we call kuli kuli here in Nigeria. And the way she did it is, she empowered some women in Niger State. So she goes there, buys groundnut, gives to those women, they produce the kuli kuli, then she packages. Now, all this while, the last couple of years she's been doing that. She will do the packaging. Some people will now come to buy from her and export it. So, but this year she now faced the reality that, look, this is now a time I must go into the export business. So I produce it, yes, but I must also begin to export. Incidentally, just this afternoon also, she sent me a message that her company is at the Lagos, International Trade Fair. So now what does that mean? It means she's scaling up her business based on the free advice that she enjoys from me, free consulting, so to say. But her business is expanding and is scaling up. So what she has now done this year in response to COVID-19 was to now introduce rice as part of the items she sells. So what she does is break the bulk. She now packages rice in 5 kilos, 10 kilos, and it is moving very fast, okay? So that is why I talked about innovation. And that means when you face a challenge like this, you have to think what to do with the box. You don't think outside the box. That is old school, okay? The next normal is to think what to do with the box. And for every business, there are many boxes. So you take each box. One box is cost. One box is revenue as per different products and services. What will you do with them in order to enhance your dollar income? These are the issues in strategy for 2021. You certainly must do things differently, but align it with what your market is saying.
Well, that was a really good think within the box. Thinking outside the box is old school. I'm going to use Dr. Adebika. Okay, so the next question I'll ask here is, in as much as 2020 was a tough year, it has opened up opportunities and seen a few businesses pivot into new ventures. Yeah. Please identify sectors and perhaps organizations that did well or took advantage of the opportunities. What lessons can we learn from them?
Okay, thank you so very much. Now, I will say that looking at the data available and what we also get from news about organizations, two sectors in particular this year, they have fared very well from the feedback we get from operators in those sectors. ICT is one, and I won't mention the name of which among them, the GSM telephony service providers. But there was a particular one of them where one of the middle management staff told me that I just woke up one day and received a huge bonus. That was sometime in April, early May, okay? I received a huge bonus. And I told the lady, I said, that must mean that your company is actually making a lot of money. And I now said, how do I rationalize that? If most of us, because of the lockdown, have migrated our activities onto the, the digital platform, that means our meetings are now virtual like this one. Now, by the law this year in Nigeria, public companies are permitted now to hold virtual board meetings, okay, and so on and so forth. For every such meeting, you are consuming data. And as you consume more data, that is money for them, okay, on the one hand. Then on the other hand, those who manufacture ICT infrastructure, in fact, like I mentioned earlier on semiconductors, that is what is driving the Taiwanese economy as we speak. Now, those who are within that space, those ordering for servers, and I think also they mentioned that with respect to Taiwan, the order for servers is unprecedented for Taiwan this year. So for companies, therefore, within the ICT sector in Nigeria, we also see it in the data and their individual reports. It's been a very good year for them. Equally, agriculture, they've experienced a good year from what we hear. So it then means that digitization and the ascendancy of e-commerce. We do some work also in logistics and maritime. In fact, the $100 million investment I mentioned is in maritime. It's about a dry port, okay? You might call it the largest dry port in Nigeria as projected for the Southeast. So now, apart from that, there's a logistics firm we consult for. It's also listed on the stock exchange. And that company said that what we agreed as the strategy direction for them to go, they were surprised that when they interpreted COVID-19's impact, they didn't need to tinker with the direction they were supposed to go. And I told the MD, I said, I never expected COVID-19. No. If it worked well, then let's thank God for it, okay? So for them also, what we talked about them was that they needed to digitize. And so doing that at the time COVID-19 came, put them at an advantage in logistics. Okay, I can say that because it's positive. That's Red Star FedEx. Okay, Red Star FedEx. So that's the feedback I got from their CEO. Now, you find also that fintechs have done very well within this space. So, but I also made reference earlier to the four companies, Chelarans PLC, Living Trust Mortgage PLC, Mark Nichols, and the Initiates PLC. Those four, they are SMEs, by the way, and of course, fintechs. They were migrated by the NSC from the alternative securities market to the growth board because they show potential for growth and they have very good corporate governance, which is, of course, the forte of DCSL, all right? So it then brings me back to what you asked, which I've actually mentioned earlier. You must have a very clear vision as to what you want to do and where you are going. So, and then of course, good business practice. If you don't know how to go about that, ask DCSL. That's what they do for a living. They have set you on the right path for good business practice. Then of course, innovation should be a daily thing. Even this we put to our own government. Because at some point we wrote a memo to the presidency on how our government should respond to COVID-19. And so what we also do as citizens is that if they get it right, we benefit. So which was why we didn't keep short about that. Then execution is the final part of it. In fact, what we say when it comes to strategy is this: execution and strategy thinking, you can put them in 5%, 95%. So the success of strategy is 95% execution. So in which case, we call it measuring strategy. So every one of us should begin to measure strategy if we truly want to make something out of what will evolve from 2020 into 2021. Measure your strategy.
Okay, that's a very good response. Just to reemphasize what you're saying about the tech sector, the at least 2 recent earnings reports released by MTN, that's the one that has shown that their year-on-year growth has really been driven by data traffic. So I guess technology is the chief beneficiary of this virus.
That's right.
Question, and you kind of touched upon it now, but I'll still ask you, give us something more extensive. In your opinion, how well have businesses and governments, I think we should focus on businesses, how well has the government responded to the crisis of the year 2020? What could have been done better on a micro and macro level?
Yeah, excellent question. Excellent. Now, I will say that on both sides, they've responded well in the sense that everyone came to a kind of sense of urgency that if we don't respond appropriately to this COVID-19, it might destroy so many things. So for government, and I will take it from what I describe as central bank-led economic stimulus, because they are monetary authorities, but they had to do more of intervention. So, and of course, I recall at some point, we were tracking the percentage of GDP that the aggregated stimulus, came to. There was a time it was 2.3%, but I recall that last week Friday at the annual bankers dinner, the CBN governor said the aggregate stimulus so far this year in response to COVID-19 had come to 3.5% of our GDP. So I did the mathematics. I said, okay, 3.5% of about 145, 146 trillion naira. What does that mean? So I said, okay, that is in the right direction. But we also look at companies as well, okay, that have responded to that. Like I said, a lot of conversations around this. I recall quite well, Lagos Chamber of Commerce, even Deloitte invited our firm to do something jointly for their tax clients. Deloitte did something for the bank industry. We're also a part of that. And of course, on occasions, KPMG invited us to be a part of a conversation with some of their clients on the impact of COVID-19, how they should respond. So it is no longer about, we are experts on our own. I remember doing a similar thing for NDIC. NDIC put a platform where deposit insurance from all around the world came to listen to what our interpretation in Nigeria. So FDIC joined that platform from US and about 14 countries in Europe, and I think close to 20 in Africa were on that platform. But these were all regulators of banking, as deposit insurance that came now to see our own, interpretation of COVID-19 and how they should respond. So from that perspective, I would say that yes, the fiscal authorities, monetary authorities have responded quite well. Companies too have done the same. But what do we take away from that? Because that really is what is important. And the way I would put it is this. And from the macro perspective, that talks to individual businesses. That's the way I would interpret that. Now, we should stop complaining about the challenges in the environment, but rather see the opportunities and factor those challenges in as constraints, what we call in economics constraint maximization. How do I survive and make money in spite of these constraints? Just like I told myself when I was leaving banking for consulting 24 years ago, I've seen the experience of consulting firms losing their staff to the banks. So how do I structure and run BA in such a way that we consult for banks and I don't keep losing staff to the banks? 26 years, going to 27 years now for operation. Only 3 of our staff have left BA for banking. And of course, at some point, one of them came back anyway. So the question is, What do? I can't pay as much as banks do, but there are other things I can do that will make them choose to remain with me. So, and that is how you design strategy. So what are the challenges? So at the micro level, that is the area I want to encourage our business people to look at. Don't worry much about the problems of the environment. Give more attention to the opportunities. Growing population in Lagos is an opportunity. Like I told the driver that took me yesterday in Abuja, when I arrived at Abuja, I said, human beings are market, they are business. Because they need food, they need housing, they need clothing, and so many other things. So what is it you are producing? You may not be the producer, but maybe a trader in it. So as their number increases, that is business for you as it goes. Now, from the macro perspective, and this is the final one there on that question. Now, what I think our government needs to do is to do focused intervention, not just talking about, we put out this much, 3.5% of GDP. It should be into what? If the informal sector is about 52% of our GDP, SMEs in terms of number, 91.1% in terms of headcount of manufacturing. It then means the focus should be on the SMEs and the informal sector. So how do we ensure that they continue to produce and also continue to create jobs? That is what is still lacking. So, but whatever intervention they want to do, let it be tightly focused on the sector that will create more jobs. That's what I think is still missing.
Thank you so much for that. And what you just said now about well-targeted interventions, when you said it, I didn't, but my mic was switched off, because, you know, even something like agriculture, exactly like agriculture, we've seen that there's so much focus there with regards to interventions, and they're doing a very good job, but then the impact is so minimal because
that's right.
The growth potential of agriculture. In fact, that's what is regarded as well, I don't want to call it new economic backbone, because it was the economic backbone before oil came.
That's right.
Yeah, so now we're seeing it making its return, but all the interventions that are coming in, we have not seen GDP growth hit at least over the past, I can confidently say 12 quarters. I've not seen 5% in the agriculture sector. So yes, better targeted interventions as opposed to just saying you're pouring money. I think measuring the impact of those interventions so that they can actually deliver properly. I'm going to ask you one last question from this set of questions before we jump to participants' questions. So this question is, any positive predictions for businesses in the new year?
Wow, that's a very good one. It's very simple, my response to that. And many times I get accused, for taking that position. And you might say, well, I'm an irredeemable optimist when it comes to Nigeria. Because every time I look at this economy, I see opportunities. And so for me, therefore, what I see in 2021 is an environment where we see more opportunities. And therefore, that is what we give attention to. Yes, I have reasons to complain. The same thing impacts other businesses, impact my own business. And what I give attention to is that there must be someone outside there that needs my services. I'm a manufacturer. Somebody outside there certainly needs what I produce. So how do I get it to them? Okay? So it then means that as much as possible, what I will spend more time on is thinking about how to locate and also take advantage of opportunities, rather than complain about government policies or how poor infrastructure is and all of this. And I want to drop this in this regard. Each time, and this is where I take my own strength from in terms of considering opportunities, I ask myself, all these foreign investors that come to Nigeria, that also make inquiries, what is it that they see that we don't see? And I recollect an Ugandan sometime last year when Mrs. Tony Sonny was launching a book that I was invited to review. And this diplomat said he was going to ask us for forgiveness ahead of the remark he wanted to make. They said he has no other, reason not to say because of the way he felt. And the man told us to our faces that, look, Nigerians, you complain so much about your economy and everything about you. But we that are not Nigerians, we come in here, we do business, we make money and take it back to our country. Now, this is an African brother saying that to us openly. Okay? So these are the kind of things I remind myself about. And I therefore look out for opportunities. The key thing here I want to recommend to everybody is that Nigeria's population keeps growing anyway. We are projected to be at about 208 million people by the end of this month. That's end of 2020. 208 million people, about 51.2% in urban areas. Okay? Now, when urbanization increases, what that also tells you is that there are certain products and services that they demand. People who live in urban areas consume more of electricity. So if they do, what does that mean? If it doesn't come from the main grid, is there a space for you to connect in terms of anything that will require power from the grid to do for them? So it then means that the opportunities exist everywhere. Number is opportunity. And let me drop this in terms of strategy for everyone here. Whatever the nature of your business, the key thing in any business is number of customers. It's about number of customers. So every day you wake up, try to win more customers. And then the ones you have won, give them such a high quality service that they won't ever think of leaving you. So I can make reference to so many like that. Central Bank of Nigeria, 20 years now, they've been patronizing us. First Bank since 1994, they still remain our customers. Of course, so many others. The principles are simple and they apply across all types of businesses. Okay? So it's about looking out to 2021, recognizing it as a year of opportunities. And so keep looking for those opportunities. And of course, let me add the dimension, prayerfully. Okay? And when one comes your way, do it so well that customer won't want to leave you forever. That is my recommendation.
Very true. Excellence is very important going forward. Okay, so we have a few questions here. I don't know if we have enough time, but I'll try and pick. Just give me a second. I'm trying to read them out.
Okay.
Okay, so I have a question from Kabir Suleiman. He's asking, he said, can we have examples of fiscal stimulus implemented in Nigeria recently? Let's say from, well, I guess this year, because it says 2019 to 2020. We have quite a number this year because of the pandemic. So if you can give us, let's say 3 to 5. That was
okay. All right. There is in manufacturing, number one, that was put together by the central bank. There was one for the health sector, pharmaceutical companies, also by the central bank. There is one for agriculture that was put through NASA. That is NASA Microfinance Bank, 50 billion. They've put a fresh one now. There's a new one that the government came up with, 75 billion over a 3-year period. So 25 billion for this year to next year, but 25 billion every year for 3 years. Now, these are examples of stimulus packages that were introduced. Now, what you also find, apart from what already existed, that they also were renewing the ones being managed by Bank of Industry and so on and so forth. So there are many, quite all right. It is when all of this aggregated. In fact, the last time we looked at the figures, we're looking at close to 4 trillion naira then, up to 5 trillion. There was a time that when we factor what we said earlier on into it, the expectation of about $1.3 billion from IMF, then for the World Bank and all those. When we factor them in, we're talking then about close to 7 to 8 trillion naira. So which made us generate the percentage of GDP that the stimulus represented. So these things are very real. And I've had also some at the micro level, companies, individuals that benefited from them. So these things are actually happening, but like we said, there must be focused intervention so that we can measure the impact. We have not yet started measuring the impact. which is very, very important, as Timothy said earlier on. Okay, I hope that satisfies Kabir's question.
I'm sure it does. I'm sure it does. We have another question here from Matthew Akinlade.
Okay.
Dr. Adedipe mentioned that MPR is supposed to signal to the banks on the interest rate they pay and charge. Why did CBN get involved in dictating, I don't like to use that word, but in dictating interest rates on savings deposit of 1 to 1.5% to the banks? Why is this low interest rate not reflected in lending rates by the bank?
All right. Very good question, but let me explain it this way. Now, I don't envy the central bank governor or anyone in the what they call the board of governors in central bank, because when you get to a time like this, you are dealing with so many issues and policies that seem to trade off against each other, which means you have to now ask yourself, which one should I emphasize? Let me give an illustration of that, and that will explain this. In 2016, okay, in fact, it started in 2015, towards the end of 2015, I got an invite from Central Bank, and they said, we want you to do a research on countries that have experienced a combination of currency crisis and economic crisis, but especially focus on emerging economies. Look at them historically, and then establish which ones was able to effectively come out of that double whammy, as we call it, currency crisis, economic crisis, happening together at the same time. So how did they get out of it? So on the basis of that, advise us what Central Bank of Nigeria should do. Okay, so they also from time to time face challenges that the looking was, they have a fantastic and well-resourced research and statistics department. Central Bank has it all, okay? The one thing I think I appreciate about them is that from time to time, they also talk to us on the other side, those of us that are more on the operation side. So for the Central Bank, therefore, in playing around with interest rate policy, they desire that interest rates should drop. In fact, they desire everywhere around the world a single-digit interest rate, all right? But ladies and gentlemen, what we have seen happen in the last 11 years between the global financial crisis till date is that what in economics we knew as negative interest rate has become a reality. So now that happens when interest rates as a policy tool has become ineffective. The central bank will go into what we call quantitative easing. Another way to describe quantitative easing is creating cash ex nihilo. That means you're creating cash out of the thin air, all right? So what they also went into QE, but when you get into QE, which is a form of stimulus, that means you put money on banks' balance sheet and collect securities from them in exchange. That's what QE represents in a very simple manner, okay? Now, when you also do that to an extent, and you find that it is no longer stimulating the economy, the headache now comes for the central banker. What else can I do? So that is why the head of Treasury in the US about 3 years ago said, when it comes to central banking, it's about pragmatism. And I think that is what we explain what our central bank is doing now. It's pragmatism, okay? What do we do? So they try, it's like experimenting. What will work for us that other countries are not doing? Malaysia did the same thing during the East Asian crisis of 1997-98. In fact, they took a very hard position than what you have ever seen in Nigeria. The Malaysian government said, if you are in Malaysia and you have money abroad, we give you 12 months, bring every dollar back to Malaysia. Okay? In their own case, they had to do that. And of course, they also specified the exchange rates at that time. So different countries approach their problems in their own peculiar ways. And I think it is that pragmatism that is making Central Bank of Nigeria to try what they are doing now. And look at the implication for the capital market anyway. capital market in Nigeria, which we normally take as a signal or an indicator, a lead indicator of what will happen to the economy, have been growing steadily in recent times because interest rates are very low in the money market. So yes, what savers are losing in terms of low interest rates on their savings deposits is a gain to those who are investing in the stock market. So it's always a challenge, balancing this vis-a-vis other activities in the economy. That's why I said at the beginning in my answer to this question, I don't envy the CBN governor at all. I don't know how the guy sleeps.
I agree with you. I agree with everything you said. So I think the next question, I don't know if I have room for maybe one more question. This is from Irene Ubani.
Okay.
How do we move from being an aid-dependent and distributed economy into being a production economy?
Excellent question. Excellent. Now, I made reference earlier to Korea, but I will use Korea and India to illustrate this. Sometime in the history of India, their leader made a decision and followed up with a pronouncement that from that very point in time, India will not import anything textile. That if Indians cannot clothe themselves, then let every Indian go naked. That was what Gandhi said at the time. Okay? If we cannot clothe ourselves, then let's go naked. But we see the place of India in the textile industry globally today. But that was where I started. They also got at some point and said, if we are unable to produce automobiles, let every one of us ride bicycles. That's why tricycle emerged from India as well. The Korea I mentioned earlier on, when they first produced Kia automobiles, the first brand of Kia car they brought out was called Capital, starting with letter K. I remember in the bank industry, then we bought a lot, but those cars did not last. So we shifted from Kia and returned to Honda and Toyota. All right? But way back at home in South Korea, they did not abandon Kia as a brand. They didn't mind the quality, they kept patronizing Kia. But ladies and gentlemen, 2013, Kia won the most selling automobile award in the home of automobile. That's in the US in 2013. You can check that out, okay? But as we speak today, China is #1 in automobile. When you look at the entire range of automobiles, heavy transportation equipment, trucks and the rest of them, China is #1 in terms of volume. There was a time that it used to be Japan that was the powerhouse. So the question really is this: if we want to move from being aid dependent, then we must be very clear about consuming what we made in Nigeria. I made a recommendation to our government 5 years ago, and happily they adopted it, and they signed an executive order of the president. And that was that 30% of federal government's budget will be used to buy things that are made in Nigeria. The one thing that is lacking is that I said they should increase it steadily to get to 80% by year 2026, which of course an idea I borrowed from the US Exim Bank. Because for projects I took to US Exim Bank, they will tell you anything you want, we will fund, must be purchased from the US. At least 80% of whatever you want to buy that we fund must be bought from the US. And I had a particular experience where we insisted on an equipment manufactured in Europe. You know what US Exim Bank told us? They said, no problem. But the contract for the purchase must be given to a US company. So in which case, we must be clear to celebrate and patronize things that are made in Nigeria. When we do, over time, they will improve the quality because there is sustained patronage. But in Nigeria, we have a very big taste for good things, top quality. And that's why we keep having to depend on aid. and support from other people. We are a consuming nation. Anything you bring to Nigeria, they will buy. It's only in Nigeria somebody will buy electronics without testing. They are discovered that they call it no testing market. So you buy electronics, you don't test it, you take it home. If it doesn't work, say, well, that's my luck. That was the kind of thing my driver told me then. He said to be his luck if it doesn't work. Only in Nigeria. It doesn't happen elsewhere. Anything sells in Nigeria.
Can you hear me?
Right. Thank you. Yes. I hear
Okay,
you.
yeah. So apparently a mindset shift is required.
Yes.
The last thing you just said, that's actually very sad. So I round up. I'll just give a very short remark or comment. 2020 has been a very tough year. I like to say that Nigeria experienced a double whammy. We got hit by the pandemic. Everybody understand how to handle that. Apart from that, we had the issue with oil price. Of course, once there's a price crash in the oil markets, Nigeria goes upside down. So there was a double whammy. But in as much as that happened, there were still businesses that were able to thrive in the chaos. So now moving into 2021, now that businesses have seen what has happened, I want to believe they've been able to adjust or some position themselves in some way. Going forward, strategizing, as you said in so many ways during this dialogue, Dr. Adedipe, strategizing is important. And for businesses that did not take service delivery serious, that's client relationship management or excellence seriously, you need to do so now. You're seeing what's going on with the inflation. The headline inflation keeps going up, it's penetrating into people's pockets. And so priority lists with regards to spending, people are now being way more deliberate when they make purchases. So you need to stay top of mind for your clients, the existing clients, and also to expand your client base. So that's something I just thought I needed to say. So Dr. Adedipe, if you can give your 1 minute closing remark, and we hand over to Nike.
All right. Thank you so very much. You've actually said it all. It's a fantastic summary you gave. Only for me to also say that, yes, 2021 is promising, and we must all look out for the opportunities and not allow the negatives to take too much of our attention. So, and I wish you a fantastic 2021, a year of recovery of everything you didn't make this year. So let me say also a very big thank you to DCSL for having me here and the wonderful conversation that Chinwe and I have had today. I'm grateful.
Thank you so much. Thank you, DCSL. Nike,
thank you. Thank you very much. Thank you, Ms. Egwin. Thank you very much, Dr. Adedipe, for sharing those insights with us, as well as for sharing your optimism with us. Well, we've learned quite a lot today, and we hope that we'll learn from the challenges and the issues that occurred in 2020 as we develop our strategies, our business strategies for 2021. Thank you, Chinwe, for making our time to join us as well and for moderating this session. We also want to say a very big thank you to our audience for making our time to join us as well. What a way to end the week on a very high note, especially for some of us that are trying to draw up our strategies for the coming year. Like Dr. Adedipe said, we are your go-to firm for all things relating to corporate governance. So if you want to put together a board, you want to do your board evaluation and everything corporate governance, please do not hesitate to reach out to us. And also, we are happy to note that we are also an accredited partner with the Nigerian Stock Exchange on the Growth Board Initiative. If you need additional information or any information on that initiative, please do not hesitate to reach out to us. We have a few trainings lined up for the rest of December the rest of the year. We have a corporate governance masterclass for companies. We have a company secretaries and compliance officers masterclass scheduled to hold on the 14th and 15th of December, as well as the board practices and dynamics for directors. We'll look forward to welcoming you at this event. Please do make our time to join us at the next edition of our DCSL webinar series. That is also going to be very insightful. And at that edition, we'll be discussing key focus areas and 2021 business and economic outlook. We would also have at that event a very renowned economist that is popularly known for sharing very good strategies. So please make out time to join us. Additional information on that will be shared on all our social media platforms, on Instagram, on Facebook, on WhatsApp, on LinkedIn, my apologies, and on Twitter. Please look out for all of this information. Thank you very much, and do enjoy the rest of your evening and have a good weekend ahead. Thank you. We sign out now.